welcome to my channel. My name is V Phillips, your local real estate expert. 2023 was such a crazy year. So today, the first video of the year, I want to talk about how it was for us in 2023 and what we look into in 2024. Today, having with me is Michael Stavy, my partner and team leader of Dominion International Group. We have so many contract and deal together. Hi, Michael.
Hey, how's it going? Thanks for having me on.
Good. So what do you think about 2023?
As a agent, 2023 is challenging both for residential and for commercial agents. So the big thing that we've been dealing with since the uptick in COVID and the COVID era of real estate with low interest and high demand, we started having challenges with interest rates. So the interest rates flipped, and they flipped into a area where people are not used to, and it's been several years since we've all seen interest rates above 5 really. So now that makes it challenging because so many people are locked in at interest rates in the 2s and 3s. People want to buy in the 2s and 3s still, and it just isn't possible. So although it does create challenges, it does also open opportunity. So when you have lack of buyers, just simple supply and demand, you have more inventory. More inventory means competitive sales prices. So although you're paying higher interest, you're actually capitalizing on lower costs on the homes, increasing your equity in the ownership. So what a lot of people say is marry the house and date the rate. So you can always refinance whenever you want, but you can't correct negative equity.
I totally agree with you. We got a bit hit on residential as well. I got a lot of challenging with the loan fell through just because they have problem with get the loan approved for a residential home, even for first-time home buyer as well. Again, I see a lot of people saying that, well, should I just wait? Let me just wait for the interest rates to go down. But a lot of people don't understand that when interest rate go down, how price gonna go up, especially when people start bidding for the house, right? Yeah. And then, but at that point, you cannot refinance or change the house price at all. Where when the interest rate goes lower, you can refinance for the better rate in the future.
Yeah. A lot of people are buying when there's high demand. We get multiple offers, 50, 100,000 over asking, and it's amazing, right? It sounds great, but when the market corrected, those people who paid that 100K over, the market corrects, and then the neighbor's house in the corrected market sells for 50,000 less. So that's a 50,000 negative equity scenario, and that's something you can't correct. So you're actually going to make that up through your interest payments. What you're saving there is being dumped back into the correction on your equity. So it's very important. Is there a perfect time? No, there's never going to be a perfect time for any buyer, but hindsight's always 20/20, and we do have years where these things have happened. So we have a good idea on how to preserve and protect equity and capital preservation in whether it's an investment or end user, as well as navigating high interest and the correction of high interest. So it's nothing to be fearful of, and it is concerning. What really I felt impact with high interest the most is the amount of money you pay with the difference between a 4% and a 6.5% or 7% interest rate. Although people can afford it, the lenders look at that extra payment per month, and it starts messing with people's debt to income ratio. So if you're financing at 4% and your payment's $2,000, but you're buying the same house and you're financing it at 7% and your payment is $2,500, that extra $500 is counted toward does this fit within your debt to income ratio? If it doesn't, you don't qualify for it, which is the worst part, because at a 4% interest, you probably qualify. So that's where I think most people were being impacted, and low income, first time home buyers who, traditionally try to do FHA or try to do these low down payment options, that they were getting hit hard because it's already low down payment. So your payment's higher than if you put 20, 30% down. In some of these instances, you have PMI in addition to it. Plus you have the high interest. So now it's these compounding numbers that don't go toward the equity of the home and then start impacting the individuals because of their debt to income ratio.
Mm-hmm. I totally agree with you. So now we are here at 2024. You know what? I start seeing interest rate coming down. What is your forecast for 2024?
Well, the good news is the Fed pretty much announced 6 times they will lower interest this year. So if you think about it, over a 12-month period, the lowest they would adjust the rates is about a quarter of a point, so 0.25%. So if they are going to do that 6 times this year, it's a point and a half. That's 1.5%. So if we're sitting at a 7, and then you go down 1.5 points, that's going to put you in a 5.5% range. The good thing about that is that's going to start opening up the doors for people who did have problems with debt to income ratio. That's going to open up the doors for sellers who maybe have a 4.5% interest rate. Now it makes a little more sense. You're not going to lose all your equity in your home because the interest payment is so crazy. But as a buyer, especially buying new construction, using agents like V can help negotiate capital being given to you by the builders to buy down your rates, to lower your rate overall. So imagine it's 5.5%, and then you can get 1 point bought down because the builder's incentive, and now you're locked in at 4.5%. So it's a good situation. So it's relative to would you rather preserve the capital today or preserve it long term? So, getting with V and going over those options and getting with our team, we can provide those numbers up front so that you can really see the difference. A lot of people just talk about it, but we put the numbers on paper. We can show you the differences, and it helps tremendously.
Yeah, a lot of people come to me and ask, hey, should I sell my house right now where I finance at 2.5 or 3% and buy a new one? Or can I just rent that house and buy a new one? There's a lot of options for each of you, depending on your financial situation. So feel free to reach out to us so we can go through one by one for each of your case, and we can determine what is the best way to approach your situations. Now, talking about development and commercial, so how is a change in 2024 going to affect that field?
Well, commercial, although real estate is real estate, commercial real estate, residential real estate are opposites. One of the main factors I feel on the commercial side in this past year was commercial lending is wildly different than residential lending. So a lot of these bigger banks handle those loans, and they have a lot more restriction and requirements. So traditionally we like to go through regional banks or smaller local banks because they have less regulation. This year, because the market was slow and things were happening, some of those smaller banks were either merging or being acquired by the larger banks. So we would have loans with a regional bank who was getting acquired or merging, and they would actually change some of their underwriting rules to the new banks. So, and then impacting our loan. So maybe they would go, normally they were doing 25% down, now it's 40%. 15% down more on a $2, $3, $4, $5 million property is a lot of money. Mm-hmm. So to suddenly have to come up with $1 million extra is kind of crazy, but it became a necessity. Rates coming down, it's not going to be as fast on the commercial side as it is on the residential side, but it will help. It'll open up the doors for people who need to collateralize to acquire versus just having the luxury of having a couple million in the bank to throw at something. So I think it's going to open up the door tremendously on the acquisition side as rates come down, and it's going to allow banks to feel more comfortable as they lend at lower, more economical rates. And once again, debt to income ratio, payments, all of those things play a role in this as well. So it's going to be interesting.
Yeah, I can't wait for what's coming in 2024. You know what? I start seeing how they start increasing the price at this point.
Yeah, I mean, it's gonna come in. Houston is a cyclical market, mm-hmm. and it's a consistent cycle, with the exception of COVID because that was wild. But if you were to take 2015 through 2019, and then you take 2022, 2023, and you line up how the sales look, it's identical. So we have a very, very consistent cycle here in Houston. It has something to do with weather, a lot to do with school cycles. So we're coming out of a lull, the low cycle, mm-hmm. and we'll start trending upward into March, and then we'll start peaking April and May into the summer. So the summer is going to be the peak for Houston home acquisition. So as a seller, you want to be on the market then. As a buyer, it's challenging to be on the market then because you're going to have a lot of other buyers at that time. They want to get into the home before school starts. They want to do all these things before they become busy in the fall. Mm-hmm. So with holidays and things like that, everybody's distracted. That's not when you want to be moving. Right. So, as a listing agent, that's the best time. You have the most traffic. As a buyer's agent, depending on the needs of the individual, do you want to take them during the summer? They may have to do it. But if you can help educate them in advance, you can actually save them a lot of money. The last thing you want to do is be in a multiple offer situation and you have to sacrifice some of these luxuries and some of these things that traditionally help you as a buyer to be able to buy the home. You don't want to pay over market. So, it's a little bit of a tricky deal, but that's why you have professionals like professionals like myself, because we can help navigate those things. So it's going to be a good year, I feel.
I'm excited. Let's touch base on investor, okay? So last year, a lot of investors backing out because the number doesn't make sense for them on cash flow. But, I see some of investors who jump in and take a little bit of the, break even or cut a bit of loss. They can use that toward the tax, right? So now this year, what do you think on investor side?
I think it's great to be an investor in real estate. And it depends on what you're investing in. But if you are able to invest today and break even as what we call an equity investor, you should plan and sit down and go over numbers as rates adjust year over year, so that if you refinance at X, how much money you'll be making in addition to. If you can get an asset today and have a small cash flow, or even break even and just build free equity on the home, plus you're capitalizing on other tax incentives and things like that, it's very worth it. Once again, budget related. If you have a couple $100,000 versus a couple of million, what you can and can't buy is wildly different. But it makes sense to invest in something and have your money parked somewhere. Actually, this past year, the big bank run in California actually pivoted a lot of investors and clients of mine who have money, who had just cash in banks in California. They actually wanted to put it into a tangible asset. So real estate's a great vehicle for that, because one, real estate, as long as you pay your taxes, it's always going to be yours. Two, whether it's land or commercial, income producing, you have something there that you can use and hold and appreciate over time. But most importantly, depending on the bank and who you are and your ability to get loans or credit lines, you can still collateralize your asset and create a line of credit against it. So if you're able to take $10 million in cash and you buy a $10 million retail center that's income producing, you could take that to the bank and say, hey, I want to create a line of credit on this. How much would you be able to let me take out at one time? They may say 60, 70%. So imagine you have access to 60 or 70% of your cash flow or money, as well as it's tied to an income generating asset that's covering your debt. If it's in the bank, it's in the bank. And most of the time you don't have access to all your money in the bank. If you wanted to pull out cash, you have to go through a few hoops to get it done. So I think that's one of the big things. But the people who are able to capitalize in cash investments this past year are really going to be the ones who got the best deal.
Yeah. A lot of investors come to me and, they ask, hey, what can I do as an investor? Single family, multi-family. But here with our team, we have a lot of tools to educate you and figure out what is the best solution for your money and how to maximize the return. We can go anywhere from single home, residential, multi-family, land development, a lot of product. Just come to us and we can go over that, okay? Now we're gonna save that for another video. Now let's just wrap this up. What is your advice or insight for a first-time home buyer, investor, developer for 2024?
As a first-time home buyer, I think it's a great time to buy a home. A home's a great investment. It's something you're getting utility out of. You might as well park your money and build equity in yourself. It's going to help you today. It'll help you in the future. If you're renting, you're paying somebody else's mortgage. So every payment you make, you're building equity for them. So it's a good time to do it for yourself, especially with rates coming down and a lot of builders providing good incentives. Also price range related. Conventional loans just lowered their down payment requirement. So you can do 5%, and there are even some that are 1% and 0% on conventional. With FHA's always had a 3.5% for buyers who qualify, plus they have down payment assistance programs, builder incentives. All of these things can make it to where you can actually go to closing and pay $0. Like, how crazy is that? You just show up, sign the paperwork, and you're in your new house, and then you start, that's madness. So you might as well invest in that today. Houston's an emerging, growing market, incredibly diverse. Texas in and of itself is a very strong microeconomy, so we're very solid. But eventually, the secret gets out. People start coming here, and that's where it gets a little crazy. For investors, developers, if you have the land, it's your time to develop. There'll be a demand for homes. Investors, once again, relative to your budget and what you need, you can capitalize on real estate investment as a income generating asset, but then also get great tax incentives, whether it's tax credits or rebates, to help you at the end of the year. So it can work in two different ways to help you. So it's definitely worth looking into. And, it's something that we can help with is putting the numbers together, which is most important, especially on the investment side, but even on the single family side, like understanding your loan options and what's the difference between, 20% down, 5% down, 3.5% down. How does that impact your monthly payment? And how do we get creative if there is challenges with that to income ratio? So there's several things that can be done. It's just you have to have the right people who can look at the numbers and analyze the numbers, and it'll save you time and headaches in the future. You'll have the right people surrounding you to make your transactions smooth. And I think that's kind of the way to go.
Yeah. Agree with you. A lot of people come and ask me, hey V, when is the best time to buy? Now is the best time to buy, especially this year. Lock in your house now, look into it, explore your option to see if it's, financially, if it's okay for you to buy. You don't want to wait until the rate go any lower and we have bidding war, which means you can put in 30, 50, maybe 100 more than the actual house price, right? Now, we also partner with a lot of lender that give you great rate, or, we have a lot of options for zero down payment, especially for nurses or people with, good credit score. So any question regarding real estate, come talk to us. We will have solution for everyone.
Yeah, even if you have credit challenges, we can connect you with people who can help you resolve those so you can become a buyer. It doesn't have to be today if somebody declines you because your credit is, has hiccups. Everybody's gone through something. So don't be afraid to reach out and say, look, this is my situation. I'd like to buy within the next year, because we can plug you in with the right people who can help you solve some of these problems. And maybe in the next 6 months, 8 months, you become qualified for a great loan to buy a great home for yourself and your family. Or if you're an investor, whether you're domestic, international, there's lots of options for you to buy here in the States and have a solid investment. So your money, even if it's abroad, we can bring it here. If you're looking at the EB5 or E2 options, we also work in that world as well. So if you're looking for permanent green cards, if you're looking for temporary visas, we have options.
All right. Well, thank you so much for having with us today, Michael, and thank you so much for following my channel. I'm just so excited for 2024.
It's going to be a good year.
Yes. Make sure to comment, like, and subscribe, and follow me for more real estate insight.